All right, mad lads, I'm back. All right, we're gonna look at the charts here now, and we're gonna start looking at some of these candles. So this will just be a little training for those that are already familiar with them, and kind of some new stuff for those that aren't. All right, so hopefully you guys just watched the, the setup video, all right? And this is gonna go into what they look like on the charts and how to trade them with our cycles, because that's kind of half of my trading really is trading cycles and candle setups. And of course, position sizing is huge, risk management, amongst other things. But candle setups and trading with cycles, you can make a you can make a good amount of money just doing that. All right, so let's start looking at some here. Right, we've got a nice big bottoming tail setup here. I can tell that the drawing tool is not going to work well. All right. You got a bottoming tail setup there, nice big wick. And the candle after is your entry. With the cycle cross, that was a great buy setup. Right? And your stop would have been about 23%. So that means you can use, let's see, let's do some quick maths here. So you could use like, on a 100K account, just to give you guys a little glimpse into the risk management and why I like candle setups so much. This candle setup basically tells you where your stop goes. No, basically about it, it does. It tells you your stop goes below here. And it's exactly 23% away from your entry, right? If you have a 100K account and you're willing to lose 2% max, I just picked that as like the standard, that's $2,000, okay? And this defines your risk, so I can risk exactly, in this case, it's about 8,000, right? You can risk about $8,000 because 8,000 times about 23% is around $1,900, right under that 2% max loss per trade. All right, and you'll see some other examples we'll give here, like how about this one? If a bottoming tail setup off the bottom and an engulfing setup. So here we have something cool where you have a candle setup and you get a chance to add right into the low of that setup, which can give you really tight risk. I mean, that's a 7% stop. So now on that 100K account, you can risk a lot more because your stop's only 7% instead of 23%, right? Nothing really changes about what you're doing, right? You're still just taking a setup with your cycle cross, but now you can use a little bit more money, meaning you can make more on the upside because you're closer to your stop loss. So a lot of people hear, oh, I can only take a 2% max loss per trade, and they think, oh, well, I can only take trade setups where I get a 2% stop. And that's just, that's not going to work for you most of the time. Sometimes it might get that, but a lot of times you're going to get big stops. And I prefer using big stops over a longer period of time more often than not. On the day trade side of things, sometimes you got to keep tight stops, but oh well. Moving on from that. So you want to be trading these setups around your cycles, right? You get a bottoming tail setup. That's your buy. Stop below the low. Another engulfing setup along the way. Maybe add some more. You guys see this down candle? That's a BCI, right? You had a nice uptrend. Price attempted to stall. I'll just zoom in to make sure we were all catching this, because there's a lot we can see just by these few moves up, right? So this was the wick. This was the confirmation of a bottoming tail. Okay, here we have a topping tail setup, maybe the first chance to take some profits. But your cycle's still rising, so there's no real rush. All right, you get a bullish engulfing, Maybe that's a chance to add some more. You get a topping tail takeout right here, plus a bullish engulfing, plus a BCI. That's a great chance to add more while your cycle is rising. Hey, your bands are coming down though on your daily, so you got to be a little wary. We're definitely looking to take profits into our major pivot points here and here. And we can see that lines up with old support. Something to take into account. Old support. Right. All right, and then you get a topping tail setup, bearish engulfing after your cycle crosses this. That is when you take 80% of the size you added here off. Okay, and you leave, and you can even argue you flip short, depending on how you want to trade it. You can use it as a take profit, like I said, or as a take profit and a flip short. Right, so flip short, that's a topping tail setup. Your stop would go above there, right? But then, by the time your cycle crossed back up, you'd want to be out of 80% of that. So that would mean in here, you're out 80% of that short. And then you get a bearish engulfing and a cycle cross, boom. You can add that right back on, right? Likewise, you could have entered a small long here. You have to be a little careful at that time. It is a bullish engulfing setup, but at the time, your bands are down, your cycle is coming down. It's a little risky. You're not buying with a confirmed cycle cross, so you don't really want to be buying too much size. Maybe you just buy a small piece, right? You get the cycle cross. Maybe that's when you decide to exit the rest of your shorts from here if you entered, right? And then once you get the topping tail, not topping tail, the bearish engulfing setup and the confirmed cycle cross, that's when you can be adding some more shorts or completely closing your longs. All right, you see that? Bearish engulfing, bullish engulfing. There's a BCI right there near the middle of the move. There's a BCI here, the middle of this down move, this pullback. Right, and then you're taking profits on shorts into this level, into this BCI. BCIs are, I like to think of BCIs as like stopping points because there's liquidity there. There's liquidity where there were sellers and the buyers pushed through it. And you can see these markets will often use BCIs as like magnets, right? And check this out. 1, 2, 3, 4, 5 candles down, BCI, 2 more down. Look where price rockets to right after, right here, right near the BCI. It's just like a magnet, right? And then you're waiting once your cycle is nice and low. You get an engulfing setup. Maybe you take some more profits off the table on your short. Your cycle is not crossed yet. Looks pretty flat there. I would take more profits into this level. That's a bottoming tail setup. You could take more off your shorts. Now, I say take profits. I'm not like, oh, take half off here. I take profits often. So usually 10%, 5%, 15%, 20%. So that when your cycle does cross, you want to be out of 80% of your size. And the last 20%, we can use candle setups as a trailing stop loss, right? Meaning, let's look at our first example again, right? We entered here on this, right? We had a nice long wick and a confirmation of the bottoming tail setup. We enter, our stop is here, okay? And then we get an engulfing setup here. So now we can raise our stop loss to here, right? Oh, we get another engulfing. We can raise our stop loss again. Oh, we get another engulfing, right? This topping tail gets taken out. We can raise our stop loss again, and boom. That's where your last 20% gets taken off, right? You take off 80% by the time your cycle crosses, and then you let the market take out the last 20%. Same thing on a short setup, right? You short here with the cycle cross down, and then you exit 80%. When you get the cycle cross, that would be here at 8,500. And you exit 80% by then, And then you're lowering your stop whenever you get a candle setup, right? So you short here on the engulfing, your stop starts there. You get an engulfing here, but a topping tail takeout cancels it. So you raise your stop or lower it, however you want to picture it. Then you get another bearish engulfing here. You raise your stop, and boom, the market takes out your last 20%. Right? There's another topping tail takeout setup. And so now, here's one thing to consider. Right? You're in a downtrend. Right? Your bands are going down. You're making lower highs. You're still putting in higher lows long term. Right? That's bullish. But in the short term, you're in this intermediate term bear market since we broke down from the bands back here. Right? So it's possible this daily cycle is going to roll over before, or rather, price is going to roll over, and this is not going to be a full cycle up. And we'll know that by looking at the 4 hour, which I'm going to go ahead and highlight this zone in a different color. We'll do red, right? And we'll go look at that in a minute. We'll see if the 4 hour can give us a good sell setup here, because that's a topping tail setup on the daily, right? And it's possible. Yep, see, and then we did not get a full cycle up. So ideally, we'd like to catch price at the top of a cycle and the top of price. Like, this was great. This was a great setup for shorts. But sometimes the ideal setup for a short, right, if we look at the top, that was right here. The top was right there. But the cycle cross was here at 8,100 instead of shorting at 9,100. That's $1,000 difference by waiting for that setup. Now, I'm not saying go in and add a big, if you're trading the daily, I'm not saying add 80% of your size or anything on a move here, right? You got to trade smaller and trade, or you got to trade a different time frame completely. Okay? All right, and then ideally you'd add more shorts once you get the cycle cross, which was here at 7,800. But now your stop is still up here, right? This was the setup. There's not been another setup since then. But because your stop is 18% away, you can still take, it's still okay to take the short. You just have to play on smaller size, right? If you have a 100K account, you can't risk that much because a 20% stop is going to get to that 2,000 max loss per trade pretty quickly. And honestly, guys, I will keep my positions at half size sometimes, right? Meaning, if my max loss per trade is 2%, $2,000, sometimes I make sure it's $1,000, because that means if I hit a max loss, or if I hit if my stop gets hit on a trade, it means I'm not done for the day. I've only hit half of my max loss per trade, right? So in this situation, if I had an 18% stop and I wanted to make sure I could trade even after that stop got hit, I'd have to be really small in my size, or I would have to just catch this trend reversal much earlier. And what I'm saying here is you can do that given you're in a downtrend, right? You're making lower highs, now you're making lower lows. Because you're in a downtrend, it's okay to start being a little contrarian to your daily cycle and start looking for short setups on the 4 hour, especially when you get a topping tail, right? Especially when you get a setup. Right now, ideally, of course, like I said, ideally you catch it really high in the cycle, a topping tail setup, you're above the 30. I mean, that's like that was a golden short, honestly. But sometimes it's not always going to be that way, but you still want to be able to catch these moves. So now, real quickly, we'll look at the 4 hour and we'll see if we could have caught an intermediate term cycle rolling over back then. My guess is yes, but we'll see. All right, and it looks like, yep, right on the money. Here we are. Now, see, this is why you don't just short when your cycle is, quote, getting high, because, right, you might, or at least you don't short on size. You might start your short here when cycle's getting high, and that was at 8,500, which long term we can see that was still a great short. But if you're playing it day trade or something, or short term, you right? Like some people will short here and then they'll have a stop right above it and they'll get stopped out and they won't re-enter and they miss everything. But if you're trying to short here in anticipation of a cycle cross, you're better off shorting really small size, no more than 10, 20% total. And then if you break a big pivot level, you can get out. But if that cycle does eventually work in your favor, all these little shorts are going to play out. And then we get the cycle cross down and a bearish engulfing candle. Right? And that's the setup you take with the stop above. Right? Now we can see we actually could have caught that and the retrace, the pullback to it to add more. I guess think about this. If you have a stop here and you're short here, you should be happy shorting anything into that same zone. So why wouldn't you short the next 4-hour cycle as well with another bearish engulfing? And then when you short there and you move away from it, you can lower your stops to here. Right? Keeping in mind, on the daily, right, this all happened in here while your daily cycle was rising. You would not have caught a short until, somewhere in here if you were just trading based off the daily cycle crosses. All right, look at that difference. You could have gotten in 2 shorts completely before the breakdown. And not that this was a bad short by any means. It's just saying it's kind of going into this concept of you can get tighter risk and better entries by using lower time frames to your advantage. And that's why I like to say I like this 3 time frame rule, right? Even if you're just trading the daily as your main time frame, you should be using the 4-hour as a lower time frame and the weekly as a higher time frame to give you signals, to give you more advantage, right? So that's I know that was kind of getting into some position sizing, cyclical stuff, but I know a lot of you want to talk about that because that's all part of the process, right? It's not just knowing candle setups. You got to know how to trade with them, right? So let's get back in here. All right, we talked about all this. There's a BCI, the middle of that move. Take that out. That's a chance to add some more shorts. All right, and then you take profits afterwards on the BCI. Right, you get a bottoming tail setup with the cycle cross. You can buy that if you like. Your bands are on a downtrend, so any buys are contrarian to your downtrend. Right, and then you get that topping tail setup like we talked about. You can use the 4-hour if you like to use the 4-hour to catch that turning early if you want to. Oh, another thing I should mention, if you do choose, right, I did say any buys are contrarian to this intermediate term downtrend, but I was a buyer back here and I was a buyer at a lot of these places, and my biggest mistake was not fading these rallies in a downtrend. My biggest mistake was buying here, holding for here, buying here, holding for here when we kept making lower highs, even though we're making higher lows. So when you're in a downtrend like this, you have to fade anything you're buying because your buys, while your cycle might be low, it's not contrarian to your cycle buying here, but it's contrarian to the rest of your trend. So you got to fade these on your lower time frames, right? Think about this. You get a bottoming tail setup here. Let's look at the 4-hour, right? Because lower time frame can be very helpful. Right? You get a bottoming tail setup, which would have had you in here on the daily. And then you take profits on that when your 4-hour breaks down. Right? That's what I should have done instead of just assuming this was going to be some overall higher low in a trend that was overall bearish. Right? So a candle setup long does not necessarily mean that a downtrend is going to reverse. Right? You're better off trading candle setups with the current trend. Right? And then another tip I like to use is watching for candle setups at fib levels, right? So we have this big leg down right here. I like to watch for candle setups, rejections at the 0.5 and at the 0.618. And what do you know? With our daily cycle cross, we get a big bearish engulfing right off the 618, and we get a follow-up bearish engulfing with another cycle cross, and that would have had you shorting right about there. Right? You guys see how I use the fib to I'm not like, don't get me wrong. At this point, I'm not putting a bunch of sells. I'm not putting 80% of my size in a sell order here at 9,700. I'm just using them to watch how price reacts at those levels. Maybe I'll put like say I want to buy $1,000 or I want to short $1,000 worth of Bitcoin. Maybe I'll put a small $100 sell here and a $100 sell here, where if it goes against me and it runs all the way up to here and stops me out, I'm not losing that much. And then once I'm confirmed the cycle is crossed and moved down, then I can sell, right? Because we want our size to be with the cycle cross. And then same thing on the way down, I'm watching for how price reacts at these fib levels. And if I get a buy setup, that's when I want to cover a lot of my shorts. Right? You see here, the cycle gets low, crosses up right there. We get a bullish engulfing setup. That's where I want to take a lot of profits right off this halfway mark. Right, making sense? And now watching, these bands are descending again. Okay, so let me go ahead and circle this. Right, this is the first place to cover because you cycled back up. And now if you want to add more on your shorts, you got to catch the 4-hour rolling over. And check this out. It rolls over exactly at the bands with a bearish engulfing setup with the cycle cross. Isn't that beautiful? That's a beautiful short setup. Meanwhile, on the daily, what happened? All that happened was this. And that's not, look at the cycle right now, guys. Sorry. That's not telling me to short more. That's not telling me to short more. That's not telling me to short more. Price is telling me to short more, but at this point, it's already too late. Where on the 4-hour, we saw the 4-hour cycle was up here when price was like right here and a bearish engulfing formed, and you could have added more shorts there by using your lower time frame. Now, if you're just trading the daily, you probably were not able to catch that so easily. Right? And then your cycle gets back low. You get a bullish candle setup. I'd be booking more gains on my shorts. Now your cycles cross back up. Up, there's a bearish engulfing. I would definitely be taking some profits on any longs if you took any from this setup. If not, I would add some more shorts. Now let's look. Where would you be adding shorts on the daily? This would be 74.90. Let's see if you could have caught that a little better on the 4-hour, on the intermediate term. Was it there, really? I don't know where I lost my place here. I don't know why when I'm doing something on the chart on a 4-hour over here and I switch to daily, it's got me like over here. All right, yeah, that was not the right circle. Let me try this one more time. All right, where was I? Aha, it was over here. Right. Another example here. Right, your daily cycle is rising. You get a daily short setup, but your cycle is not crossed. So it is a short setup, but you can't use a lot of size because you don't have a cycle confirmation. And that would have you shorting at 7,500. Pretty solid. That was June 4th. Let me make sure I keep that date consistent here. June 4th. Aha. All right, so the daily would have had you shorting right here, and it wouldn't be a big short because your cycle hadn't crossed down yet. But on the 4-hour, your cycle crossed back up here, right? And you had a bearish engulfing right there. So you could have opened a short. Really, you had a topping tail set up already up here, so you could have opened a short at 7,700. But even if you waited for the bearish engulfing, you'd have been in at 7,600, as opposed to shorting on the daily down at 7,500. Again, small difference, but I mean that was also, you know, next to 2 to 3%, right? So that adds up. You know, imagine that happening 10 times a year where you could have beaten that. That's an extra 20 to 30%, right? So. And that way, you can use a lot of size on the 4-hour and just be sure to take that big size off with your cycle cross, right? See how the cycle cross is here? You get an engulfing setup. And this is where a lot of people can get confused on trading multiple time frames because, right, you add 80% of your size on the cycle cross on the 4-hour, right? And you want to take 80% off with the cycle cross back up on the 4-hour. But if you recall, our goal for this trade was to catch the daily cycle rolling over, right? We're shorting right around here on the daily cycle, and we were trying to catch it rolling over early for this greater down move. So, you know, imagine you're shorting a lot here, and then you cover everything here instead of just, you know, making money in this whole down move. The thing is, if you're shorting here on the 4-hour in anticipation for a daily cycle cross, you should hold most of that position until the daily cycle crosses back up. But if you're just trading it as an intermediate term trade on the 4-hour, then you should take profits with the 4-hour cycle cross. Now, that means you didn't catch the whole trend down here by just holding. But what it does mean is you sold some here with your cycle cross. You took some gains, right? You bought 80% back. Cycle cross down. You sold that 80% again, except now a little more because you made profits. All right, cycle crosses up. You're back out. Bada boom, cycle crosses down. You're back short. Okay, your cycle crosses up here. Taking gains on your shorts. And to be honest, you should always, you made a new low after this. You shorted. You made a new low below here. You should always take profits on new lows. You don't have to wait for a cycle to be low. But, you know, point being, when your cycle gets back crossed, you're out 80% of this short. Right? And you're patient. You get another 4-hour cycle high. Bearish engulfing. You can short again. Oh, stopped out. Back near the bands. Getting pretty high in the cycle. Sorry, I'm going to start going on a tangent here. Point being, if you're trading the 4-hour to trade the 4-hour, then trade the 4-hour, right? Be in and out with your cycles, okay? But if you're using the 4-hour to catch a bigger change, right? You get your daily cycle doing this, right? By the time your daily cycle rolls over here, you'd be shorting, you know, in here. But your 4-hour cycles rolled over and gave you optimal short entries for your daily time frame. Right? Is that making sense, guys? Shoot me a message if it's not making sense, and I'll elaborate further. Right? Well, I actually drew that cycle pretty accurately too. That was actually really accurate. Yeah, I hope that's making sense, guys. You can use your cycles on your lower time frames with candle setups to catch a higher time frame rolling over. And it's always easier to look back at a chart that's already happened and see this in motion as opposed to, you know, let's use this now. Now let's use candle setups now to our advantage. And this concept of using the 4-hour to catch a better entry on your daily, we can use that deeper, right? We can use the 30-minute, our day trade time frame, to catch better entries on our 4-hour when our 4-hour also lines up with our daily. All right? I know this is kind of like, what? And it can get really confusing, which is why I would recommend having separate accounts for day trades, swing trades, and long-term trades, right? Because if you can use the 30-minute chart on your long-term entries, but you don't want to be making a long-term entry on the 30-minute chart and then selling it on the next 30-minute cycle high. Like, that's just a day trade, right? So let me give you guys an example here, right? You're in a downtrend, right? You want to add shorts. The top of the move was here, and we actually shorted this perfectly. But if you look at the top of that move, your cycle is still rising. So a short now would be contrarian to my daily cycle rising. But a short would be in the direction of our overall trend, which is why I was okay taking a 4-hour trend or a 4-hour trade contrarian to my daily cycle in anticipation that it would roll over. And we'll go and look at that now, and we can see, much like one of the plays back earlier, the daily cycle had not rolled over yet, but the 4-hour came right into the descending bands, right into old resistance, and the 4-hour cycle crossed, meaning at that point we were on the right-hand side of the cycle, and I can add big size on my shorts. And then stops go above there. And this was one of those cases where I use a 2-bar stop rule, meaning I was shorting into this zone, but I did not have a stop loss right above it. And price doesn't show it on coin signals, but price did wick above it. And it's okay if you get stopped out by that too. I didn't, because I'm not using a hard stop, right? If price just ripped through it, it happens. And I'm looking to add more shorts up here anyways. And I can always cover this piece, right? If I short here and it rips through, I can just cover it on a pullback at a smaller loss, right? And then you flip long and your longs will make up for it. But that's kind of went on a little tangent there about that. That's why I use the 2-bar rule. So if you get a wick above a big resistance level, I'm not going to instantly close all my shorts just because of that. But if we get a close and then another close above it, then I might be closing my shorts because, might just be making higher highs and higher lows now. That makes sense. And then the 4-hour, we've seen numerous opportunities, right? Cycle cross here. Let me zoom in so you guys can see this, right? When we're looking for a bearish engulfing, we're following the swing lows of our bullish candles, right? Swing low, swing low, swing low, and boom, this candle takes out our swing low. That's a bearish engulfing. And then we get the cycle cross right after. Now that we're on the right-hand side of our cycle, we can add a bigger short in this area. And our stop would go above this pivot, right? And you take profits on your shorts into here. Take profits more into here. That's exactly what I did, that is. All right? And then you can even catch these entries better on the 30-minute time frame. All right? And I'll go into, in the Boss Crypto Trading Strategy videos, I'm going to go all the way into how fractal this model works. But more often than not, where we want to be adding shorts in a downtrend above the 30 is going to coincide with the 30-minute 200 and the 30-minute pie line, right? So this is where we want to be adding shorts at that time. And let's go look at our day trade time frame. You can see, like I said, that area we're looking to add shorts on our intermediate term in the 4-hour is near the 200 and pi on our day trade time frame. And I actually added a short perfectly at the top at pi that day. All right, and the reason I did that, as I've kind of talked about in another video, is everything lined up. Right, the 4-hour cycle was rolling over. We were back at 30-minute pi. The 30-minute cycle was high. The 15-minute cycle was high. The 1-hour cycle was high. We were above the 30 on the 4-hour. Everything was lining up. And then the 15-minute gave me, and it's not showing it on coin signals, but this should be a big wick. And it gave you a big topping tail setup with the cycle crossed down. It was the short entry of a lifetime. Not really, but it was great. It was pretty solid day trade wise, that's for sure. Right, so hopefully that is enough looking at candle setups for now, guys. If you want me to go over candle setups more, if this wasn't helpful enough for you, whether trading cyclically or looking at setups in general, please give me some feedback, guys. Shoot me a message. Let me know what you thought. All right, but that's going to pretty much wrap it up for this video. I'll see you guys in the chat.